Silver just did something nobody expected. The price hit $89 an ounce before it suddenly slammed into a wall. It happened so fast that most traders didn't have time to react. One minute the screens were flashing green, and the next, everything turned red. Now everyone is asking the same thing. Is this a temporary pullback or the end of the run? While silver was stealing the headlines, gold was quietly making its own moves. Gold reached $5,170. That is a massive number for the yellow metal. It feels like the entire financial world is shifting right under our feet. Even oil is acting strange lately. It dipped down to $90 a barrel this morning. Usually, when precious metals spike, energy follows right behind. But this time, the pattern is breaking. Does this mean the war economy is finally starting to cool down? We've been living in a high-tension market for a long time now. Investors have been hiding out in safe havens like silver and gold. When prices hit levels this high, people start to get nervous. They wonder if the bubble is about to pop. Look at the charts from the last 48 hours. The volatility is off the charts. Silver hitting $89 felt like a fever dream for long-term holders. Many people have been waiting decades to see that kind of price action. But the sharp pullback that followed was a cold shower. It dropped faster than it rose. That kind of movement usually suggests a lot of big players are taking profits. They aren't waiting around to see if it hits 100. Are you holding silver right now, or did you sell during the spike? It's a tough call when the market is this aggressive. Gold at over $5,000 changes the math for everyone. Central banks are still buying it up as fast as they can. They don't seem worried about the current price point, but for the average person, buying gold at $5,000 feels risky. It's hard to jump in when the price is at an all-time high. Then you have the oil situation. $90 isn't exactly cheap, but it's lower than people feared. If oil continues to drop, it might signal a slowdown in manufacturing. Or maybe the supply chains are finally stabilizing after years of chaos. The connection between these three assets tells a specific story. Silver is the wild card, gold is the anchor, oil is the pulse of the global economy. Right now, that pulse is starting to skip a beat. We are seeing a massive tug of war between inflation and recession. One side wants prices to keep climbing. The other side is bracing for a total freeze. The silver shock was just the first warning sign. It showed us how thin the liquidity really is. When everyone rushes for the exit at once, the door gets very small. What happens if gold follows silver's lead and pulls back? That would leave a lot of investors out in the cold. The market psychology has shifted in just 24 hours. People who were euphoric at $89 are now staring at their screens. A pullback this sharp can shake the confidence of even the most seasoned bulls. It wasn't just a small dip in the afternoon. It was a full-scale retreat from the recent highs. Gold is still holding steady above 5,000, but the tension is building. You can almost feel the hesitation in the air. Is gold waiting for silver to find a bottom? Or is silver signaling a much bigger crash for all precious metals? Oil at $90 is another piece of this puzzle. Energy prices usually drive the cost of mining these metals. If oil continues to dip, the cost of bringing silver to market could drop. That creates a different kind of pressure on the price. Lately, the war economy has been the main driver of these spikes. Geopolitical tensions have been pushing everyone into hard assets. But if those tensions are cooling, the premium on gold and silver might vanish. Investors are watching the headlines as closely as the tickers. Any sign of a ceasefire or a trade deal could send metals lower. But many don't believe the cooling period is real. They think this is just the eye of the storm. Have you noticed how quiet the big banks have been during this silver run? Usually, they are the ones talking the market up or down. This time, the movement felt more organic and more panicked. The retail crowd was buying silver like there was no tomorrow. That's often what leads to these massive blow-off tops. $89 is a legendary level for silver. It smashed through old resistance points like they weren't even there. But when the buyers ran out of steam, there was no floor. That's the danger of a vertical price move. The way down is usually just as steep as the way up. Gold at $5,170 is a different story. It has been climbing a much steadier ladder over the last year. It doesn't have the same shock factor that silver does. Yet, seeing it break 5,000 is a psychological milestone. It's a number that makes people rethink their entire retirement strategy. If gold stays here, the dollar's purchasing power is clearly fading. Most people can't even wrap their heads around that price yet. It feels like we are living in a new financial era. In this era, old rules about expensive and cheap don't apply. But oil dipping to 90 suggests that demand might be hitting a wall. Consumers are finally tapped out after months of high prices. When people stop driving and shipping, oil has nowhere to go but down. That ripple effect hits every other sector eventually. If the war economy is truly cooling, we might see a return to normalcy. But normal is a relative term these days. Will we ever see silver back at $20? Most analysts think those days are gone forever. The floor has likely moved much higher than it used to be. Even with a pullback, silver is still in a massive uptrend. But the speed of the drop was a reality check for everyone. The big question now is, who was selling at $89? It wasn't just the small-time investors getting out early. The volume suggests that some major institutions hit the exit button. They saw a level they liked and they didn't hesitate. This leaves a lot of latecomers holding the bag at much higher prices. It's a classic move in a volatile market like this one. Silver has always been known as the devil's metal for a reason. It moves faster and more violently than almost anything else you can trade. One day you're a genius, and the next you're staring at a massive loss. Gold at $5,170 is far more stable. It doesn't drop 20% in a single afternoon very often. But even gold investors are looking over their shoulders right now. If silver is the canary in the coal mine, the air is getting thin. Oil dipping to $90 is a signal that shouldn't be ignored. It suggests that the frantic energy buying of last month is over. The war economy thrives on uncertainty and fear of shortages. If those fears are fading, the massive premiums start to melt away. Maybe the supply lines are finally catching up with the demand. Or maybe the global economy is just slowing down faster than we thought. A slowing economy is usually bad for industrial metals like silver. Silver isn't just a store of value, it's a massive part of electronics. If factories aren't humming, they don't need as much silver. That might explain why it hit a wall so hard at 89. The industrial side of the equation might be signaling a recession. Do you think the recent drop is a buying opportunity or a warning? It's hard to tell when the headlines are changing every hour. Some analysts think we are headed for a massive everything crash. Others believe this is just a healthy correction in a long bull market. Look at how the dollar has been performing lately. It's been struggling to keep up with the rise in hard assets. When gold hit 5,000, it was a huge blow to the dollar's prestige. It showed that people are losing faith in paper currency. But $90 oil helps the dollar gain some ground back. Lower energy costs reduce the pressure on the average consumer. It might give the central banks some room to breathe. They've been backed into a corner for a long time now. If inflation cools off, they might stop raising interest rates. But that is a very big if in this current environment. The silver shock proved that there is still a lot of fear in the system. People are desperate to find a place where their money is safe. But safe is a very expensive word these days. Entering gold at over $5,000 is a massive commitment. Most families can't even afford a single ounce at that price. It's becoming a market for the wealthy and the institutional players. Silver was supposed to be the poor man's gold. But at $89, it wasn't exactly cheap for the average person. Now that it's pulling back, the retail crowd is hesitant. Nobody wants to buy the top of a bubble, but nobody wants to miss the boat if it goes to 100. It's a psychological trap that keeps people frozen in place. The volatility we are seeing is a symptom of a much larger shift. Global markets are trying to find a new equilibrium. For years, silver was stuck in a very tight trading range. Breaking out toward $89 was a structural explosion. It caught the short sellers completely off guard. Many of them were forced to buy back their positions at any price. That massive short squeeze is likely what pushed it so high. Once those positions were covered, the buying pressure vanished. That's when the sharp pullback began to take hold. It left a trail of technical damage on the charts. Support levels that held for months are now being tested. If silver doesn't hold its current ground, it could fall much further. Gold at $5,170 is the last fortress. It's the final line of defense for those who fear a currency collapse. As long as gold stays above 5,000, the bull market is alive. But if gold starts to slip, the entire precious metals sector will shake. Oil at $90 is acting as a pressure relief valve. It's the only major commodity that isn't at an all-time high right now. Lower energy costs could be the only thing preventing a full recession. But $90 is still high enough to keep inflation sticky. It's a delicate balance that the world is trying to maintain. The war economy hasn't disappeared, but it's evolving. Governments are shifting their spending into defense and energy. That shift is what drove gold and silver to these historic levels. If the spending slows down, the prices will reflect that immediately. Look at how the major stock indices reacted to the silver shock. They were mostly flat, as if they didn't know which way to go. Investors are rotating their money into different sectors every week. One week it's tech, the next it's hard assets like silver. This ping-pong effect makes it very hard to build a long-term plan. Most people are just trying to survive the week-to-week swings. The pullback from $89 was a wake-up call for many. It reminded everyone that markets don't just go up in a straight line. Even in a massive bull run, there are moments of extreme pain. If you bought silver at 85, you are feeling that pain right now. But if you've been holding since 20, this is just a blip. Perspective is everything when the market is this chaotic. What is your long-term target for gold and silver? Some people are still calling for $10,000 gold. Others think silver will eventually hit triple digits. But the $90 oil price is the real number to watch. It dictates the cost of living for almost everyone on the planet. If it stays stable, the war economy might be finding a plateau. A plateau would be a welcome change from the constant spikes. But stability is a rare commodity in the current financial world. The silver shock was just one chapter in a much longer story. We are watching the repricing of everything we own. Gold, silver, and oil are just the leading indicators. The real move is happening in the value of the money itself. Stay sharp, because the next shock is usually just around the corner.